What is FBAR?
It's the reporting of foreign bank and financial accounts that must be filed with the Financial Crimes Enforcement Network, also known as FINCEN. The intent is twofold. It prevents money laundering and tax evasion, and also ensures that there's visibility of foreign accounts.
Who must file an FBAR?
United States-based companies and individuals are required to file an FBAR if the U.S. person or corporate has a financial interest or signature authority over at least one financial account located outside of the United States, and the aggregate value of all foreign financial accounts exceeds $10,000 at any time during the calendar year. There are two components of FBAR, individuals and corporates. Individuals are either those who have a financial interest in foreign bank accounts or those who have no financial interest. Financial interest is you own or control a bank account. For instance, you have $400,000 in Switzerland. You have a responsibility to report this to FINCEN. No financial interest. A signer on a foreign bank account, for example, a U.S. citizen or foreign national working in the U.S. This is typically someone in finance or treasury who can sign for money transfers or wire funds for their employer's accounts. American companies must compile a listing of all foreign bank accounts and all foreign subsidiaries, which they report in their corporate FBAR. This is due each year on April 15th. In addition, corporates with foreign bank accounts that have U.S. individuals listed as having either wire or signature authority have an obligation to either report this information to each individual or file on their behalf, which many companies have elected to do. Let's take a moment to discuss FBAR and why it matters to corporations. Since 2010, U.S. citizens and resident aliens have been required to file an FBAR reporting any foreign financial accounts on which they are or were signers. FINCEN has extended the individual deadline each year, but we do not anticipate that trend to continue for the 2017 filing. Reporting requirements by individual include their personal information, corporate and entity owner information, bank name and address, account number, and highest balance for each account that calendar year.
Why should a company care about the individual signers?
Current regulations require corporates to provide this information to either FINCEN or each individual, since they are ultimately the account owner and have the records with all the required information. Please note that individual reporting is also required for any former employees if they were signers at any time since 2010. Penalties on the individual for not filing are very high. These penalties range from $10,000 to more than $100,000, depending on if the failure to file was intentional or not. In 2017, FINCEN announced substantial changes to the batch FBAR submissions. Batch filers will now be required to submit the updated FBAR data in an XML-based file rather than the old AXI format. FINCEN has also said that they will look at possibly eliminating certain individuals who are required to file on accounts on which they are not signers. They have also indicated that they may eliminate the streamlined filing that is currently present when there are more than 25 accounts and require reporting for every account in the future.
Why should we file for individuals? Isn't the government going to eventually drop the requirement?
I get asked that from a number of corporations. Granted, FINCEN has been delaying each year the filing deadline, but not the requirement to file. So if a company hasn't filed yet, when they do file, they'll have to file for all the past years as well. And that's a lot more difficult to go backwards and figure out who your signers were at the time, what your high balances were, and if you have employees who left, it could be hard to locate their address. So delaying puts a tremendous burden on a company when they eventually have to file. As to dropping the requirement, there's been no indication so far that they will do that. In fact, one of the things that has come up is that they are considering, for the people who have 25 or more accounts and they're having a truncated filing, they're actually talking about eliminating that truncated filing, and they would have to actually report all accounts.
What is the definition of a signer for FBAR?
Actually, it's not just the signers on the signer card. That's what we typically think of when we think of signers, but it's a misconception for FBAR. If you go to the FINCEN language, it specifies that anyone who alone or in conjunction with another person has the ability to disperse funds. So certainly check signers are signers, but realistically, so are your initiator and approvers of wires. They jointly have the ability to disperse funds from the account, so they're also signers.
For balances reported for FBAR, the highest ledger balance should suffice, shouldn't it?
Well, FINCEN says it has to be the highest balance in the account on any day of the year. So ledger balance does not accurately reflect that usually. In fact, ledger balance could be quite different from the high balance during the year. This shouldn't really be too difficult to get the high balance. If you have good visibility to bank accounts globally, that's easy. If you don't, and a lot of companies don't, it is simply a matter of doing what most companies do. Send out an email quarterly to your locations across the world, ask for their signer changes and the highest balance for the quarter. Then selecting the high balance in the account is just a matter for Treasury of looking at 4 quarters and choosing the highest. It's really just a discipline for the field to work with Treasury and report this information.
Can I use Bloomberg rates to translate the foreign currency in FBAR?
Actually, FinCEN offers no flexibility on the rate to use. The instructions require the use of U.S. Treasury reporting rates of exchange unless Treasury doesn't provide a rate for a particular currency. Now, they have a very long list of currencies, so it would be unlikely that they wouldn't. But if they didn't have a currency, you can use another published exchange rate, only if no exchange rate was provided by Treasury. Regardless, whichever exchange rate you are using, if they don't have the exchange rate and you're using another one or you're using their exchange rates, you must use the rate in effect on the last day of the tax year for all amounts on the form, even those amounts such as the maximum value that may not have occurred on the last day of the year. So if you're looking at 2016 filing, which was filed in 2017, you would use the year-end 2016 rates for anything that occurred during 2016. The historical Treasury rates are located on the Bureau of Fiscal Service website.